happening in the market that, and tell me if you think that move is going to be something that has some staying power.
I really don't think it has some staying power. It's a little bit of the risk on with respect to equity. So you're seeing a little bit of money moving out of bonds into equities, but to date it hasn't been so significant that I think we're fearful of a continued significant rise in rates.
There's a lot of issues in Washington that, of course, muni bond investors have to pay attention to. We had some Fed comments that were quite interesting this week. We also have coming up a sequestration deadline. What sort of things are you advising clients right now as we navigate our way through the latest happenings in D.C.?
Well, I think the first thing people should remember is not to panic and make irrational decisions in light of something that is not going to have immediate impact. It would take time for the sequestration cuts to actually have real impact. And all of what's going on in D.C. right now is more media driven in the sense that we're concerned over longer term impacts. But the key is to wait and see what's going to eventually develop and not panic.
So what are some of those longer term concerns you have then?
Well, we certainly are concerned that if the sequestration cuts were to be fully implemented, it could have a drag on the economy. And of course, that would tend to lead us towards lower interest rates. But I think that the impact would be minimal because by the time they actually got implemented, they will have passed something that would remove most of those cuts that take place over a very long period of time, several years.
Tom, also happening in the last few days, President Obama proposed a new type of taxable direct pay bonds called America Fast Forward bonds, very much like the BABS program. Is that encouraging for the muni market? Would there be demand for a product like that, even though it's going to be a tall order getting that through Congress?
Yeah, we've got so many different things going on with infrastructure. We've got all kinds of acronyms. I'm going to look down at my notes here. We've got the Transportation Infrastructure Finance Innovation Act. We've got TRIP bonds, Transportation Regional Infrastructure Project. All of these programs, I think, are beneficial for the market in that we can get the infrastructure around the country, which is in dire need of repair, fixed. The problem with a lot of these programs is that if they are in fact replacements for Build America bonds, I think that's positive for the market because we would see more bonds or less bonds available in the muni market available as more bonds get taken out of the municipal bond market. But the other aspect of these proposals is that they're talking about doing tax credit bonds. Those have never been successful in our marketplace, and I'm concerned that if they try to do this in lieu of, or I should say in conjunction with, the 28% cap on munis, then I don't think that's necessarily a good trade-off. If they want to leave munis alone and then implement these projects, I think that would be very positive for our marketplace.